Hey guys, Michael Chin here, and in this video, I'm going to show you the best trading style there is out there. Well, actually, there is no best trading style out there. Your best trading style is the one that fits your personality and your particular trading needs. So in this video, I'm actually going to list out some of the most popular trading styles and help you decide which ones work best for you. So number one should be everyone's favorite, and this would be day trading. Day trading itself is not actually a trading style. I would say it's characterized by many different types of trading styles, but overall it is trading throughout the day session and having little to no overnight risk. Now, why is day trading so popular? Well, many of the styles that it uses are generally high risk, high reward setups. So day trading can be a very lucrative trading style. Now I've listed some of the benefits below and we've gone over a few of them. So there is a high profit potential with day trading because of the high risk, high reward setups that you will be using. You also might find that there is low margin. Now, if you're trading futures contracts, some brokerages will give you very small margin requirements to trade futures contracts, such as a single ES contract only costing you around $500 in margin. But on the flip side, if you're day trading stocks and options, you will have to be careful of the pattern day trading rule, which requires you to have over $25,000 in your account to continue day trading. And lastly, there's going to be no overnight risk. At the end of the day, you're going to be wrapping up and closing all your positions and then heading off and getting a nice sleep. All of that sounds great, but at the end of the day, day trading is not all butterflies and rainbows. All right. When you're day trading, you're sitting in front of the monitor all day. You're actively monitoring the charts from market open to market close. And depending on the type of strategies you use, sometimes you can't look away. You also can't get distracted during these times. So you have to be laser focused the entire time of trading. If you're distracted, you might miss a trade. Or worse, if you're looking at the charts wrong, you might take a bad trade and end up taking a loss. So as a day trader, you're always in the zone. And lastly, let me push this one point. Day trading is not for beginners. If you have never traded before, please do not try this. You will be sucked dry in a matter of days. The charts will be moving way too quickly for you to analyze them, and your emotions will rile up and you'll be making bad trades left and right. So who is day trading for then? It's for that experienced trader who has a confident setup that they're able to quickly execute without hesitation. The person also needs to be able to actively monitor the chart for the entire market open. So that means if you have a full-time job, you're kind of tough out of luck unless you want to trade 1 to 2 hours here and there. And day trading is also really nice for people who want to grow their account. With low margins on futures contracts, you can easily grow a $1,000 account into a $10,000 account, $50,000, even $100,000 depending on how good you are. Okay, enough of day trading. Let's move on to number 2, which is going to be a complete 180 in what is called positional trading. And this is going to be your longer time frame setups that you're looking to play out over weeks, months, maybe even years, depending on how long the setup lasts. And these setups are going to be based off of fundamental analysis and technical analysis, which means that you are going to be looking at some sort of fundamentals about the company that you're trading or the equity. And then you're going to be adding in some technical analysis like some support and resistance to help you find the best entries for the trade. Okay, to give you guys an example of what I'm talking about, I've brought up a daily chart of AMD here. That means that each one of these bars represents a day of trading. So this whole chart represents about 3 months. Now, let's say around October, which is here, I found out that AMD was a fundamental buy. And, it somewhat is. It has been edging out its competitors like NVIDIA and Intel. So that might be a good reason for me to buy because I think it will trend higher. Now with positional trading, I do have the luxury of having a much larger position size. So let's say I was coming in with $10 million. Then if I wanted to invest $10 million, I would split this up over the course of multiple days. So first I would come in here when I found out and put in 5 million. Then I would start using technical analysis to find a good place for me to re-enter. A plausible indicator that we could use is the exponential moving average, and this usually helps us find a good area for prices to pull back to support. And we can see prices came up here and pulled back to the exponential moving average. And so this is where I would buy in my other $5 million worth of stock, and then I would be fully invested into AMD. Now, I would only buy this second piece of AMD if I still thought the fundamentals were alive. If at any point the fundamentals start to reverse, like if Intel released a new product that would beat out AMD, then I would want to close my position as soon as possible, because the fundamental analysis is the thing that really holds the positional trade setup as a setup. And when something is no longer a setup, then we need to get out, because at that point we're just gambling money. So you might have already guessed it, but the big benefit of positional trading is that you get to capture massive moves. Okay? You're not day trading, so you're not restricted to the trends within the day. You can capture these trends that start, AMD all the way at $5 and ends at AMD at $200. You can also have much larger position sizes. You have multiple days to buy into your position, which means you have access to a lot more volume. So you could have trades of upwards 100 million, 200 million, whatever you please. There's also a much larger window for your entries and exits. If we're to compare this to day trading, you might only have 1 to 2 minutes to spot your entry. With positional trading, you might be able to miss the entry by a whole week and still get a good price. And the same works with exit too. You might be able to exit a whole week later and still make a ton of profit. And lastly, there's chart time. You might only look at your chart once a week or once a month, depending on what your setup looks like. Remember, it's all about the fundamental analysis first, and then the technical analysis comes later. And even then, you could even put in an alert for the technical analysis. You could have your brokerage tell you when prices come back to the exponential moving average. That way, you don't even have to look at your chart until that happens. Once again, this looks great, but what happens if the market goes sideways? Then for 3 months, you might not be making any money. Or what happens if prices start to reverse, but the fundamental analysis never kicks in yet? Then you might take a bigger loss than you would have if you're looking at a lower time frame chart. And there's also the personality styles too. You're gonna be taking some overnight risk. If there's a black swan event and the market flushes, you're going down that drain too. And you're gonna have to be ready to wake up to that in the morning. There's also gonna be a whole lot of patience. Your trades probably are gonna take at least a couple weeks at a minimum. So you're gonna have to sit there and be very, very patient. So who is positional trading for? Well, it's for that trader who really doesn't have a lot of time on their hands and is willing to be patient. It's also good for traders who don't like to lose. With positional trading, if your fundamental analysis is correct and you give the stock enough time to play out that fundamental analysis, then it's generally going to be a winner. It might not be a huge winner. You might win 5%, 10%, 15%. But those small wins can add up to a lot of money, especially if you're trading a large account. And so this also goes for traders that have large accounts. If you're trading $100,000 and you make 10% on that, that's $10,000. Whereas if you're just trading a $1,000 account, 10% really doesn't seem like a lot to you. Okay, on to probably my favorite style of trading and one of the best styles of trading for beginners, which is swing trading. And to me, I think of swing trading as identifying trend continuation patterns. So let me go to a chart and show you guys what that might look like. So we actually get to look at the same AMD chart here, and there's a great swing pattern on it. We can see that prices are in a bullish trend here, which means that they are trending higher. And then we come up to a high here and pull back to the exponential moving average. Now, the trend here has been bullish. And then here we get what might look like a bearish trend, but is actually just a pullback. Once prices start to rise again off of this and then level out, this is actually one of the best opportunities to buy a stock. And that is because we are looking for this trend to continue. And that's kind of where the naming swing trading comes from, right? You're trading this swing. So what usually happens is we would buy in this zone here, and we would look to sell maybe about half of our position at the all-time highs, right? So we're capturing this swing, and then we might look to ride out half of it for as long as prices continue to trend up. So with all that in mind, let's take a look at some of the benefits of swing trading. And if you look at some of these benefits, you can already tell why I like this for beginners. Most of this is catered towards swing trading on a daily chart, which means that your trades are mostly going to last around 1 to 2 weeks. But there's a very high probability of success with swing trading. And that is mostly tied to the fact that you are trading with the trend. You're trading with everyone else in the market, so usually prices are going to move in that direction. And I like having high probability of success for beginners because even if a beginner makes a mistake, if you're trading with trend, it can sometimes just work out for you. There's also a nice, decent profit reward here too, right? You know, you're not grabbing the entire swing. Remember that. You're not buying at the dead low. So you might only get half of the move, but half of the move is still a good amount of money. And remember, if you're trading on a daily chart, you really only have to look at the charts maybe for an hour or 2 hours every day, maybe once in the morning and then once at market close. But really, that's not a lot of time. Now, if you haven't realized it already, I think swing trading is for everyone. I don't really see a reason why someone might not want to swing trade. Maybe they don't like overnight risk, but even then, they could just take swing trading on a smaller time frame chart. A lot of day traders, they're just swing traders using a 5-minute chart. So if you're a beginner and just starting out, I highly recommend you learn swing trading first. Then you can move on to the other types of trading if swing trading is really not cutting it. There is one type of trader which might not like swing trading, and they'll probably like the next style of trading. And that style is number 4, scalp trading. This is the type of trader that likes to pick up small profits, and usually they use some type of fixed price target and fixed stop loss. You can kind of think of this guy as someone who walks along the street and collects pennies. Okay, so to show you guys what this might look like, I've brought up the S&P futures here on a 5-minute chart, and I'll show you exactly what a scalper will be doing during the whole day. So they might come in here, short this, and take a few profits off here, then go long here. They might not get filled on some of their profits until like up here. Then they would see a nice short here, take some profits down here, and they would continue bouncing through this entire day, maybe taking somewhere between 10 to 15 trades, depending on how much risk they want, or they might be looking for some of the best scalps, so they'll only take like 5 a day. But in the end, a scalper is taking all of these small profits, and by the end of the day, that should usually add up to a nice daily income. And with that comes a very, very high probability of success. A lot of scalp traders that I know tend to have 90% to 98% win percentages in their trading. So if you hate losing a lot, you should go to scalp trading because you'll almost never lose. And then back to that overnight risk thing. Some people don't like overnight risk. Some people just don't like having any time frame risk. And if you're a scalper, you're probably only in your trade for about 1 minute or maybe even less than a minute. So you might have like 0 time frame risk when you're scalp trading. And like I said, there is also the consistent income part. When you're scalping, you do try to make around 3 to 5 or 5 to 10, whatever your average is, that number of scalps every day. And if each scalp has the same price target, if that price target is $200 per scalp, then you might be looking at a nice consistent profit of $1,000 a day. As the benefits are exaggerated, so too are the downsides. With scalping, you are very heavily invested in the chart. When you are scalping, you need to make 100% sure that you understand what prices are telling you, or else you will make a huge mistake. And like day trading, you are also going to miss all of the trends because you are scalping out at $1 or $2. So if the trend continues, well, you don't have any type of setup to take that. Now, some scalpers do like to incorporate what are called runners, where they will scalp out 80% of their position and then let the other 20% go on to continue with the trend, but that's a little advanced. And like day trading, please do not try scalping if you are a beginner. Day trading will suck you dry, but scalping will knock you out of the park. Because with scalping, there is very, very little room for mistake. And you are also usually risking either 2-to-1 or 1-to-1 for each trade. So when you lose, it is going to consistently beat you down until you have nothing left. So if you're a beginner, please do not look into scalp trading until you have some experience trading other styles and have a better hold over your emotions. And we've made it to number 5, the final trading style, which is the Breakout Trader. So this is the type of trader who loves to see massive moves and understands that there is still a little more profit at the end of the road that they can take and participate in. So they're going to enter that trade and ride that wave until it ends. All right, so let's take a look at what that might look like on a chart to give you a good example of a breakout setup. Okay, and here we have everyone's favorite stock, Tesla. On their most recent earnings, they gapped up almost 15%. This was a huge move. And 15% might seem like a lot, and you might think, wow, there's no way it can go any higher. But a smart breakout trader would come in and salivate looking at this. They would see that there is a flag out. This flag out means that no one really wants to sell this stock. They would also see the huge volume increase. That means a ton of people are coming in to buy this. They would also see the strength indicator here. This one's called the ADX. They see that it's rising. That means that there's a lot of conviction in this move. That means there's a ton of people that believe that Tesla should go higher. And it does. It continues to push even higher. So as a breakout trader, this is what I would do coming in. I would look for stocks with huge moves. I would see Tesla up 15%. Then I would see this buy pattern here, this amazing buy setup of a flag, high volume, high strength indicator, and buy and ride this out. And if you wanted to take the setup even further, you could see that there is a pullback here. But look, this pullback is on almost no volume. No one is really selling. Maybe some people are taking some profits here and there, but those are the weak hands. All right, the strength indicator is still telling us that the trend is really strong. So as this accumulates, as a buyer, I could even look to buy more and more here, knowing that after a big breakout like this, another breakout is bound to happen. I think the benefits of breakout trading are pretty self-explanatory. You're not going to miss out on any of those big moves anymore. A lot of people, they get like that trading FOMO where they're like, oh no, the stock's going down without me. And then they feel sad and feel bad that they missed it. Well, if you're a breakout trader, you're the complete opposite. You see those huge moves and you're like, let's go. That is my opportunity to come in and make some money here. You also have very high profit potential. Just because there's a big move does not mean that another big move can be coming. And a lot of breakouts are the start of huge trends. On the flip side, breakout trading is going to require a lot of chart monitoring. You have to be ready when that setup is poised to fire. You also have to be ready and willing to close out your positions. It's a very low probability of success. A lot of breakouts fail, a lot of breakouts reverse. And if you're not ready to close out your position the moment that setup is violated, you might be in for a long and painful reversal. And so that comes to my third point, where you can be very emotionally vulnerable here. You can buy a breakout, see it go up a few points, and immediately reverse. And you might tell yourself, well, it's just a pullback. Well, it might not be a pullback. And if it's violating your setup, it might be the start of the reversal and it could destroy your account. So be very careful with breakout trading. Be very careful with your emotions and make sure that you are confident in executing these types of setups. With all this in mind, we can see that breakout trading is not for the guy who likes to buy pullbacks. It's not for the guy who likes to buy low and sell high. He would think you're insane buying at all these high prices. And if you gave him this setup, he'd be very uncomfortable executing it. But that doesn't mean it doesn't work. Remember, there's many different trading styles out there. And if they make you money, they make you money. So this type of trading is for that aggressive trader who loves to ride momentum. He loves to see and trade volatile price action. So if that's you, I definitely suggest adding breakout trading as a type of tool to incorporate into your day trading or swing trading. So those are some of the most popular trading styles out there. I myself actually take advantage of all 5 of these trading styles depending on the market environment and what I'm feeling. But if you're a beginner, I would highly recommend you take them in this order. Start out with some positional trading, learn to buy stocks and see them grow, then learn how to identify those swing patterns and start buying those setups. And then if you really want to go into day trading, go into breakout trading, and you can also take a look at scalp trading if those are the trading styles that would work best with your personality. Thanks for watching the video, guys. If you have any questions about any of the trading styles that I've described, please feel free to ask below in the comments and I'll make sure to respond. And if you like the video, please give me a like and subscribe. Thank you. I'll see you at the next video.